Lance Roberts here with 3 minutes on markets and money, talking about what the heck happened with gold yesterday, right? This is something that was interesting. Markets did sell off here just a little bit yesterday. Very kind of a very condensed sell-off in the S&P 500. Mostly technology stocks, while we saw industrials, materials, and healthcare stocks actually improve a bit here. But again, the S&P 500 remains on a current money flow buy signal. Again, markets still near all-time highs. Didn't quite make it yesterday. They're going to attempt to do it again today as we open up the markets this morning. But the real question is what happened to gold prices? Because gold prices had a very, very sharp sell-off yesterday, down about 5% by the end of the day, and actually finished towards the lows yesterday as well. All of a sudden, this really kind of came out of nowhere. Gold is on a money flow sell signal here, has triggered a MACD sell signal, suggesting that gold prices are going to go lower. Target right now for gold prices short term is about $1,710 an ounce. Now, we've been talking about this in our newsletters and our reports here over the last couple of weeks, is that gold had gotten very extended, more than 3 standard deviations above its 200-day moving average. You can see the gap here. Eventually, that was going to have a correction. All it needed was a trigger event to occur, and that happened yesterday. We had also talked about hedging our gold prices recently with a purchase of the US dollar. Now, dollar did rise here yesterday. We've been on the money flow buy signal here. Still a little bit more to go. And as we said before when we talked about the dollar, there's not a lot of upside to the dollar here. But again, it's lending support during the process where we have a rotation out of precious metals and bonds back into other areas of the markets, at least momentarily. And we saw that as well yesterday. We had a big decline in Treasury prices as well, with Treasury prices sitting right on the 50-day moving average. Again, likely this is going to be a good buying opportunity. Bonds are on a money flow sell signal, but deeply oversold here. Still on a MACD sell signal, so a little bit more work to go here, but likely we're seeing an opportunity to add to our bonds here very shortly, probably somewhere around 75 basis points to 90 basis points on the 10-year Treasury, be an opportunity to add money back into fixed income on portfolios. And again, you want to use this decline in gold prices here, again, to add more into our gold positions as well. We had already taken profits out of gold, had hedged it here, so we're looking for an opportunity to add positions back to our gold positions longer term. But again, just things have gotten very, very far ahead of themselves. Again, when you start getting phone calls from clients wanting to put 25% of their portfolio on gold, you know that the exuberance in a certain area of the market has gotten well ahead of itself. That had happened with gold. Everybody was talking about it. It was on the media. And by the time that you see it in the mainstream media, that generally tells you it's time to take profits out of a position, because things have just gotten overheated, kind of overly exuberant in the market at that particular time. So again, just kind of paying attention to here. I don't think this is a big thing, but the inflationary tick that we have seen as of late is really not that inflationary. We're only seeing inflation return back to more normal levels from where we were during the actual economic shutdown, which had caused a massive short-term deflationary push in the economy. Those are simply just kind of ticking back up on an inflationary basis. We're not even back to the previous levels pre-pandemic. So we're about to see, with oil prices beginning to slow down here, beginning to stagnate here right around this $40 a barrel level after coming up from 20, we'll start to see inflationary pressures kind of level out here. This will take some of the impetus off of gold, at least in the near term, but opportunities here longer term because of increased money supply, etc. We could see gold continue to perform well simply out of a fear trade of inflation more than actual inflation itself. I'm your host, Lance Roberts, for 3 minutes on markets and money. We'll see you next time.